I do think we're going to come into some type of correction over the next several months. It could be fairly sharp. It was 34% back in 2008. We could see 25 or 30% pullback in gold. And you and I talked about this a long time ago. We've talked about this many times, but once we do, and if we do have this pullback in this financial reset, this is when I believe is going to be the next golden opportunity, pardon the pun, for gold to really skyrocket. This will be the last opportunity to get physical metals, to get mining stocks, whatever you want, before we go into a multi-year huge run into the 4,000 or 5,000 mark. It would be very similar to this phase in gold back over here. The second half is the big move, a big move for gold. So
gold prices are holding steady, hovering near last week's resistance and approaching all-time highs of $2,700 per ounce, even as the U.S. labor market remains robust with many job openings. The gold market continues to exhibit strength, driven by ongoing buy-on-the-dips behavior, although volatility remains high. Despite some fluctuations, the longer-term outlook for gold remains bullish, with projections pointing to prices eventually reaching $3,000 an ounce. Renowned analyst Chris Vermeulen predicts that gold may peak in the coming months before experiencing a significant 25 to 30% correction, similar to the 2008 financial crisis. He sees this as a buying opportunity for long-term investors, with gold potentially reaching $4,000 or even $5,000 per ounce after the pullback. Vermeulen's analysis of the current market parallels the situation in 2007, just before the onset of the global financial crisis. With increasing concerns about currency devaluation, stock market volatility, and broader economic uncertainty, investors are turning to gold as a safe haven asset. These factors, geopolitical tensions, and global central banks easing interest rates, including the Federal Reserve, the European Central Bank, and the Bank of Canada, are driving the demand for gold higher. While recent price movements, including a brief pullback during the previous trading session, provided an opportunity to buy gold at slightly lower prices, Vermeulen had hoped for a deeper correction to around $2,600. Nonetheless, he maintains a positive outlook for the metal, expecting it to eventually climb to $3,000, though this could take some time. Gold's historical choppiness suggests its ascent may be gradual, but the underlying fundamentals remain strong, making it an attractive investment amid ongoing market turbulence. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think the gold market and precious metal space is kind of the most interesting right now because it's had a very nice run. I still think there's potential for some more upside. Long story short, we have seen the price of gold move higher. It's hit that 2,700, 2,650, 2,700. You and I actually talked about this long time ago. These have been targets on the charts actually for like several years, which I'll show you in a second. But we've had a really nice run up in gold over the last couple of weeks. We're seeing a little bit of pressure just the past two trading sessions, which really at this point is nothing to be concerned about because the market never goes straight up. We can go back to a couple different views on this chart, and I love to use Fibonacci extension. So if we were to take a previous low in gold and this rally and this consolidation phase, it points to where we could see gold end up going if it wants to have like a blow off phase. There is potential for gold to rally somewhere up to around 2,900. But with that said, if we were to look at the big picture, the monthly chart is really the most powerful one. And this brings us way back in time, early 2000s during that super cycle. And if we were to take the low for gold and the high from 2011, and then the low that we saw back in 2015, 2016 area, it gives us this target here, this key target around 2,700. And there's a few different chart patterns that do point to this. So this here is this giant pattern, which you and I have talked about before, massive bull market, or super cycle, a pullback. And then of course it says if we come up, my theory is if we hit the 168, which is this orange line, if we hit that level and pause, we almost always, it doesn't matter the asset class, almost always go up to hit the 100% measured move up here, which is where we are now. So this is like two super cycles. We had one start in early 2000, We're still in a super cycle for gold. Where we are right now in gold is actually very similar to right over here, which is just before we come into some type of financial crisis, some type of recession. That is one of the reasons why we see gold performing so well, is people are worried about currencies. They're worried about the economy. They're worried about stocks falling. So they're moving out of those markets and into a physical asset, which, isn't quite as controlled in that regard. And that's what we saw back in 2007, 2008, or 2007. We saw a big pause, and then people piled in, worried about bubbles all starting to burst, which we're starting to see. And of course, we've had that. We've had a multi-year pause as well in gold, and now we're in this area. And so looking at this 20-year chart pattern, I mean, we've hit that measured move, we've tagged it. And so now the question is, like, how many more of these bars, this is the monthly chart, Elijah, how many more of these bars do we have before it kind of tops out and rolls over? That's the big question. And each bar is a month. So I think this year we're seeing gold top out. I think we're also going to see the stock market top out. This is, to me, is one of the most powerful indicators of where the mentality is, the money flow, where we are in these cycles. So I like gold. I like it long term. I own a lot of physical. I do think we're going to come into some type of correction over the next several months. It could be fairly sharp. It was 34% back in 2008. We could see 25 or 30% pullback in gold. And you and I talked about this a long time ago. We've talked about this many times. But once we do, and if we do have this pullback in this financial reset, this is when I believe is going to be the next golden opportunity, pardon the pun, for gold to really skyrocket. This will be the last opportunity to get physical metals, to get mining stocks, whatever you want, before we go into a multi-year huge run into the 4,000 or 5,000 mark. It would be very similar to this phase in gold back over here. The second half is the big move, a big move for gold. So that's it in like a high level view of
gold and silver prices surged higher in midday U.S. trading on Tuesday, driven by safe haven's solid demand amid reports that the U.S. has intelligence indicating Iran is preparing a ballistic missile attack on Israel. Geopolitical tensions have historically boosted demand for precious metals as investors seek safety during uncertain times. Silver in particular has shown notable strength. According to Chris Vermeulen, silver, currently around $31, could climb to $34 based on Fibonacci extensions, a key technical indicator. This would push silver closer to significant resistance levels established by previous highs. Vermeulen notes that while silver offers more percentage upside than gold, both metals are likely to rally and eventually top out together. Data from FX Street showed silver trading at $31.36 per troy ounce on Tuesday, up 0.64% from Monday's price of $31.16. Silver has gained 31.78% year-to-date and is currently in a 7-week-old uptrend on the daily bar chart. Silver bulls target a breakout above solid technical resistance at $33.50, the May high, as the next key upside objective. With silver prices steadily climbing and approaching critical resistance, market sentiment remains bullish. Continued safe haven demand, fueled by geopolitical risks and ongoing market volatility, could propel silver higher in the weeks ahead. Let's get back to the interview.
I do think there's potential for a good pullback, but I mean, there's a lot of currency. There seems to always be a lot of currency crisis going on. Everybody always says the dollar is going to zero. And usually over time, fiat currencies all blow up. So I do feel like we're obviously inching closer, but it's also felt like this for the last 25 years that I've been in the space. So it's hard to tell when a fiat currency is going to give up. But I do feel with crypto and the currency and the debt, all of that in the States, I do feel like we have a better story now than ever for potentially the dollar to really collapse. And we see gold, especially in US dollar terms, really skyrocket. I still think there's potentially one more run and squeeze higher, one more rally up in gold, silver. I do think we could see silver. This is the monthly chart. Obviously, we're nowhere near the highs, but it has been breaking out of this chart pattern. And we can use the same theory. We can use Fibonacci extension based off the average lows here and these highs and this low. We've got potential for silver to run all the way up to around $34, which will bring us, right into these previous highs right over here. This is a very significant area. So I do think there's still some upside. I mean, silver is only at 31.30 right now. So for it to go to 34 is a pretty decent move. So percentage wise, Silver's got more percentage upside. It could be very short-lived. It could be a quick rally. But overall, we're going to see probably gold and silver more or less top out and rally at the same time. So when they both rally up and hit their, push deeper into these resistance levels, to me, that's a level to be like, hey, if you're more of a shorter term player, it's a spot to lock in some profits. If you're a longer term investor in metals, just know it's hit a measured move, which is a good thing. And now it needs to just do its thing. And now it needs time to heal that rally, because what goes up usually comes back down for a bit. And just know there's going to be some weakness, for a year or two before we see like the start of something big. So
gold and silver remain strong, driven by safe haven demand amid geopolitical risks and market instability. With gold nearing all-time highs and silver approaching key resistance levels, both metals present attractive opportunities for investors. While some expect a pullback, the long-term outlook remains bullish, with predictions of substantial gains in the coming months. With gold and silver approaching critical levels, do you see a pullback as a buying opportunity, or are we set for a sustained rally in the metals market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.